Welcome to the Deep Dive. Today we're getting into a really hot topic in the crypto world, XRP. It's one of those assets that just, sparks so much debate. Some people see massive potential. Others are saying, hold on, be careful.
Absolutely.
So our mission today is to kind of cut through all that noise, look at the facts, the arguments, and help you figure out why XRP gets such strong reactions.
Yeah, and it's a great example of just how dynamic crypto can be. I mean, look at its performance.
Yes.
XRP, over the past year, it shot up to something like 360%. Huge spike.
Wow.
But then just in the last, say, 3 months, it's actually down about 10%.
Okay, so volatile is the word then.
Exactly. That's like a key characteristic. And what we want to do in this deep dive is pull out the really crucial bits of info, the insights, so you can understand the nuances behind those big swings.
Okay, great. So let's start with the pro side. The first big argument for XRP seems to be its actual use case, its utility. When you look at all the cryptos out there, what makes XRP different?
Well, what's really interesting about XRP is its focus on a specific real-world application. We're talking about institutions using its blockchain tech.
Okay.
That's, this secure digital ledger thing. They use it for cross-border payments, sending money internationally.
Right, like bank transfers.
Sort of, but much faster. Think about how long a traditional international wire transfer takes. It can be days, right?
Yeah, easily.
So XRP is designed to act as a bridge currency. An institution sends XRP, and almost instantly, we're talking seconds, it gets converted into the local currency on the other end.
Seconds. That's impressive.
It really is. And on top of that, the transaction fees are super low, so it's cheaper and faster than the old ways.
Okay.
And, this practical application, this utility, that's what fuels a lot of the optimism. People see it potentially becoming a really important piece of global finance.
That speed and cost advantage definitely sounds like a strong point. But beyond just how it works, there's something else making it easier for people like you listening to actually invest in it, right? How's accessibility changing?
Yeah, that's a really important development. We're seeing the emergence of XRP exchange-traded funds, ETFs.
ETFs. We've seen those for other cryptos too.
Exactly. It follows that trend. So there are already several XRP ETFs trading based in Canada that launched recently.
Right.
And the big deal here is accessibility. It makes it so much simpler for investors.
How so?
Well, instead of having to figure out crypto exchanges, digital wallets, managing those, crucial private keys.
Right, which can be intimidating.
Very. So with an ETF, you can just buy shares through your regular brokerage account, the same place you might buy stocks.
Okay, that's much more straightforward.
Totally. It makes it easy to trade, and you can even buy fractional shares. So if the price per XRP seems high, you can still invest a smaller amount. It just lowers the barrier to entry quite a bit.
Got it. So, okay, we've got real-world utility, faster transactions, lower fees, and easier access through ETFs. That sounds pretty compelling. But like you said, crypto is volatile. There's always another side to the story. So what are the big red flags? Why might someone want to, steer clear of XRP?
Well, the first thing, and this applies to all cryptocurrencies really, is just the raw volatility. It's kind of the price of admission,
Right, yeah.
Their values can just skyrocket or plummet based on sometimes tiny bits of news, or maybe what other cryptos are doing, sometimes seemingly for no reason at all.
Yeah, much wilder swings than stocks usually have.
Way more drastic. And what's fascinating, or maybe concerning, depending on your view, with XRP is how much its value seems tied to, speculation.
Even with the utility aspect.
Even with the utility, its price is still heavily influenced by how popular it is with investors, by sentiment.
Okay.
So here's an example. Some analysts were looking at the possibility of a US-based XRP ETF launching.
Right, like the Canadian ones.
Exactly. And they purely speculated, that if that happened, XRP's price could initially jump to maybe $25. Now remember, it's currently under $2.
Wow, that's a huge leap.
Huge. But here's the picker. Those same analysts suggested that such a surge, could be followed by a massive drop, like a 90% crash in value afterwards.
90%? Ouch.
Yeah. Now, whether that scenario ever plays out or not isn't really the point. It just perfectly highlights the extreme, unpredictable volatility you're dealing with here.
That's a really stark illustration.
It is. And, you also have to consider that XRP has already had a massive run-up. It's climbed nearly 500% over the last 3 years, largely because of this investor interest.
So some of the potential good news, like a US ETF, might already be sort of factored into the price.
It's definitely possible. Some of that potential upside might already be baked in, as they say.
Right. Okay, that really paints the picture of the risks involved. So we've heard the arguments for the utility, the access, and the arguments against the intense volatility, the speculation. What's the takeaway then? If you're listening and thinking about XRP, what's the verdict?
Well, the overall consensus from the sources we looked at is nuanced. It's not necessarily a terrible idea to own some XRP, but you absolutely must go in with your eyes wide open, meaning you have to be fully aware of that high volatility and the speculative nature we just talked about. Proceed with caution is the key message.
Okay.
And this really brings up a broader point, not just about XRP, but about crypto in general and how you think about risk in your portfolio.
Right, the allocation aspect.
Exactly. The consistent advice is that cryptocurrencies shouldn't make up a huge chunk of your investments. Generally, no more than 10% of your total portfolio. And honestly, for many people, even less than that is probably wiser.
That makes sense. Keep the exposure limited given the risks. And that's really what we aimed for in this deep dive, to give you that balanced view, drawing from the sources so you can make a more informed decision for yourself. So as you mull over XRP, or really any of these emerging digital assets that have this clear utility, maybe ask yourself this question. How do you personally weigh that promise, the potential of the real-world application, against those unpredictable, sometimes irrational currents of market sentiment and pure speculation? It's a tough balance.
It really is. And I just encourage everyone to keep learning, keep exploring this whole digital currency space as it evolves, but always, always keep that balance between the exciting innovation and the inherent risk front and center.